guys, debt's a two-edged sword. Everyone talks about debt when things go right, but I've been there with debt when it doesn't go right.
Yep.
And it's like right now people say, why don't you start off the loans and take a little piece and everything else? What for? 12% sounds pretty nice, and I still get to go hang out with my daughter.
Yep.
What is more what? I want more life. Yep. I don't want more drama or more headache.
Hey guys and gals, Trevor here with a special guest. We've been trying to make this podcast happen for a little while. And man, so it's like before I hit record on this call with Ramon, I'm going to introduce you to him here in a second. We were having a chat, and I'm like, let's hold it right there because I want to have more of this chat on the podcast for everyone else to listen in, because him and I are really in alignment on why business should exist and how you can kind of get to that point to where your business actually does make an impact. But before you can get to that point, you've got to do some things in your business to grow it to that point financially. So we're going to be talking about a lot of that stuff here in this podcast: life stuff, success stuff, impact, but how do you grow a great business first? So I want to welcome you in, man, Ramon Gonzalez. Let people know, first of all, who you are, where you're from, kind of what does life and business look like right now, and then we're going to kind of dive into your backstory after that.
Sure. Ramon Gonzalez. I'm a Miami, Florida market. We've done a lot of different things in the real estate space. I started off, graduated from FIU, and then I went to work the corporate side at General Electric. I was there for 2 or 3 years. I moved from Miami to Connecticut, experienced the winters, wasn't used to that. And yeah, man. And then came back, out there. I met my first mentor / partner. We're still great friends and business partners today, here and there. And my first deal, I mentioned the story. I lost 60 grand. It was a couple of guys that were up to really no good, and they had a franchise system. We ended up getting involved. I was working corporate and didn't go bad. But out of that, guys, even when deals go bad today, I always look for what can I salvage and what can I learn. Mm-hmm. And it's always come down, now that we're talking about it, Trevor, it's always come down to the relationship. Like I had a deal today, a commercial deal go bad, but I was real keen on being grateful today to that realtor and that broker. I said, listen, you know what, Anna, I'm really grateful for you today. I just want to tell you how much I appreciate you. And guys, something as simple as that done with intention and from real compassion and from the heart. Like, so when you heart close someone, so one of my unique abilities, guys, is really leading from the heart. Whenever I try to lead with gusto or bravado or a lot of like another style that's not mine, and everyone has their own unique ability, way to lead. For me, it's always been from the heart. It's just who I am, right? It's just how I roll. And whenever you can appreciate someone and be grateful for them and really share that with them and be open and vulnerable and real, raw and authentic, and look to, from everything that goes wrong in your life, there's always a golden nugget, and usually it's the relationship. And a lot of people kind of look at that for granted. I don't. I'm very intentional about that relationship, because that's the legacy piece. That's what this is for. I mean, this relationship piece, I made them, one of my biggest mistakes is not really seeing the long-term value of a relationship and kind of and how to start that and how to be intentional with that and how to give to that relationship and how to also receive. Because it's not taking. If I'm giving to a relationship, the expectation on the other side, I need to give them the ability to also give to me, because they get a lot of pleasure from that too. And usually what I'm attracting now into my life is a lot of givers. So that deal went sideways. We ended up losing 60 grand, but from that I met Ed. And Ed and I ended up doing a whole bunch of deals in Connecticut, buy and hold. Before the market turned, we sold a lot of those. I was still working corporate. I left corporate and did some flip deals out in Connecticut. Moved back to Miami. I saw I couldn't buy and hold anything. My game has always been cash flow. And when I caught back down here in 05, 06, I couldn't buy anything to hold. The numbers didn't make sense. So I started being transactional, flipping deals. Did a couple hundred of those. And maybe 07, 08, market got a little funny. And we had generated so much capital that we didn't really need to work at that point. So I kind of shut the company down, took a couple of years off. Started playing semi-pro beach volleyball, believe it or not.
Sweet, man.
And yeah, man.
That's awesome.
On that, I was living on South Beach, met my wife, kind of the best gift of my life. And then we started up again together in 2011. And then flipped, bought and hold, all that through the market cycle. So we did a lot of buying and holding 11, 12, 13. And then we did some flips just to kind of generate enough income to live. And then we sold the remainder of the portfolio last year. And then most of it, we sold the last one this year. So our buy and hold portfolio, we cashed out of that. And then what we've been doing from then till now is a lot of lending. 2016, we built out the flip business to do a little over $1 million a year net. about 20 deals.
Cool.
So not fix and flip. We more like buy quality deals, solve the problem, and put them back on the market because we had liquidity. So we buy them. And again, everyone's got to figure out what that business is for you. But for us, it was, how do I do less deals, make as much as possible without doing the rehab, or just being strategic about where we add the value, and every deal with being strategic. So we pop up about 40 to 50 a deal. We do 1 or 2 deals a month, and it just freed up a lot of time. And because we could close on deals, we weren't stressed. Like, so a lot of guys say, oh, I don't want to close on it because I don't have the liquidity or whatever. But for us down here, it freed us up because I wasn't concerned if I couldn't sell it or not. And if it took longer to sell than whatever, it was our money. I wasn't paying any interest on it. And again, we earned the right to do that. So a lot of times Trevor and I were talking about that. Guys, you got to go through levels. And as you become a good financial steward of money, you'll find that you'll end up having more capital on what to do with, because people know, like, and trust you, and they know you're good with your own money. It just flows. So we sold everything, and now, Trevor, what we're doing is a lot of lending.
Cool.
And we'll do a lot of JV deals. So we'll have different guys say, hey, we want to do a deal together. We'll put up the money. They'll do the work. So I'm investing heavily in the relationship and helping them grow. So for me, when I invest in them and just lend them money, it's not transactional. I want, my conversation with the guy today was like, hey, listen, Bob, I need you to help grow. Like, for you to do one deal every 2 or 3 months, that's no good for me. How do I give you 200 grand all at once and then force you to go make more money? Yep. And I'll take, and this is how I approach it. And I go, Bob, I'll actually make less. I'll make less interest, but it helps you grow and you keep me money moving, so that together we make more together.
Yep.
Right? I'm going to make less transactionally, but I'll make more with a relationship, and then you'll make more. So I'm always thinking about that. Like, how do we win-win together, and how do I help them grow? And then what happens, Trevor, unfortunately, sometimes is they don't want to grow. And then I find myself in a position where I want it more than they do. I don't know if that happens to some of your staff, where you end up wanting more than, And then at that point, I end up having a conversation from the heart for me, saying, hey, Bob, look, I want you to grow. I know you want this. You lost some focus. Can we get back on track? And if not, I'm going to have to exit the relationship. Not in a bad way. I love you, but this isn't working for me. And I find that when you actually have that confrontational, whatever you want to call that real heart-to-heart, 2 things happen. They either get in and say, hey, you know what, it's best we part ways. I appreciate you, and I'll come back to you when I'm ready. Or B, they'll say, you know what, you're right, dude. I'm going to step up. I've been playing like a little, for a Grant Cardone term, I've been playing like a little bitch.
Yeah.
And they step up. But it's when you don't have these conversations, and then it's clear and it's fuzzy. And I find that when you have these uncomfortable conversations, it really creates intimacy. And that's how you create a relationship. I mean, I went on a rant there. I don't know if that's what you wanted, but
man, you're good, dude. There's so many gold nuggets in there, and I want people to kind of pick through that, because the journey that you laid out there, right? The journey that you laid out there, you're in the corporate world, you're up in Connecticut, started a business, but the thread that I want to pick a couple threads out of there. Then I want to talk about some more, I want to talk about some stuff here in a bit about the fulfillment and things like that, because that's something you and I are both crazy pumped about. But market cycles. So the first time we talked on the phone, we were talking market cycles. This was just short of a year ago, 7, 8, 9 months ago. And what was really interesting about your story there, different than what I see a lot of investors doing, or entrepreneurs and other types of businesses do, it doesn't matter, is a lot of people lock into a strategy and then they go, okay, this is my strategy. I deployed this strategy. And what happens, we've seen a lot of this happen with our customers, is people who are crushing it 2 years ago as a wholesaler in their market. For some reason, we would see some of these people cancel Carrot. I'm like, why are they canceling? These people were doing like 2, 3, 4 deals a month. And we go look at their website. Their lead flow was the same. Like, that didn't change. They're still ranked number 1 at whatever. And we'd reach out to them like, what's going on? They're like, I haven't done a deal in a while. I'm shutting the doors. Like, why? What's going on? They never shifted their strategy as the market changed, man. And that was one thing that I found fascinating about you, is you guys are crazy intentional to not be afraid to take the chips off the table twice, right? I mean, you guys did it twice. So what do you look for? What do you look for to kind of be a good gauge of where your market's going, where you're at, and what you need to be doing strategy-wise in your market? What do you look for to find that?
I mean, so I guess one of the first things I always look at is look at and I'm going to try and keep it as simple as possible. Generally, there's some markets, there's like 3 different kinds of markets, right? There's markets that are known throughout history to be cyclical. California, Florida, and generally along the coast. Now you're getting some of the Denvers and some of the hotter markets, Portland, right? Some of these hotter markets have had a lot of job growth or the marijuana explosion, right? they're now going to be suspect to that. Whenever something goes out of control in one direction, it usually goes back down the other way. And then you have more hybrid markets like in Atlanta, some of the Carolinas, where they'll have some appreciation when it's corrected, it isn't as bad. And then you have some markets that are steady Eddie, usually the Midwest, Ohio, Indianapolis, kind of where a lot of the turnkey operators are.
Yep.
So, one of the things that I've realized, first, I guess the first question for an investor is, what market are you in, right? How's the surf? So I can liken it to like a surfer. How's the surf? If the surf is very volatile, then you're going to have to make those adjustments if you're going to really want to maximize, because you're going to have an opportunity in that market cycle. Think of a market cycle like seasons. You're going to have December, which you're going to have winter, right? Winter, generally prices are dropping, no one's buying, inventory is high, foreclosures are high, right? This was probably 08, 09 in most cycles. And then what always follows winter, Trevor, is spring. Spring, you're going to have some investors buy in. That's where you want to get in, right? You guys want to mitigate risk. As an investor, you're managing capital. You're really a good financial steward of capital, because the reason I got into this game was to build wealth for me and my family. I didn't get into this game to build transactional income. Now, transactional income helped me pay the bills, but it's not what created wealth for me and my family, where now I can come sit here and have a conversation with you about wealth. It is different, guys. Generating rich is like, hey, I have enough to pay the bills and I have some extra money. But the next level of that is, all right, well, then how do I protect that wealth and become a great financial steward? So you have spring. Prices start to rise. There's more inventory starts to dwindle. Prices are still low. That's the best time to get in, because the market's already kind of bottomed out and you can see that. And then the next fall is summer. So right now things are heating up. There's less and less inventory. New construction starts to come on board. Less inventory, more demand, cash is everywhere. And then ultimately you get to fall, where at that point you want to make sure you reap those crops. Otherwise you're going to go into winter and you're going to miss out on the whole cycle, right? So in fall you want to make sure you capitalize and take those chips off the table and put them somewhere else. Like, protect that equity because you earned it. A lot of folks, I'll see them, I've never made a lot of money on a monthly cash flow from owning property. I made a lot of money on buying things, 3, 4, 5 times below market value, and then being able to ride that cycle up. And sure, I've increased rents as the market has risen, but make no mistake about it, by the time you add in leverage, you take on debt, and debt really is a tool of hedging against interest rate risk and hedging against inflation. It's not a bad thing. It's just that's how that game is played if you're going to play the game. And if you're going to play the game, again, not a personal preference, but more of a strict financial guiding 101 principles, right? You take on debt to leverage the return, as well as to provide a hedge against inflation. And again, you're paying back that debt with cheaper dollars. So why wouldn't you leverage, right? So if you have a nice producing cash flow asset, it'd be silly of you not to leverage. Now, if there's some schools that don't want to leverage, I think it's bad financial management, strictly from a financial standpoint, not an emotional standpoint. Because I'd rather not have the debt. But all real estate is on the cash flow piece is managing taxes and managing debt. So we took those pieces on. We were able to not pay any income tax as we flipped all those years, because all those years, as we were riding the cycle, we were generating income from the flips, but also generating losses on paper from depreciation over here. So we were in a very low tax bracket. When we sold everything, we ended up paying the taxes. But again, time value of money, you were able to defer all those taxes for all those years. And guys, it's powerful. So, and then again, you build wealth. That's how you build wealth, is through really building out the balance sheet, not so much cash flows. Cash flows an income statement play. You build out the balance sheet, and then once you build out that balance sheet, now you're managing balance sheet. Guys, I think a lot of reason why investors will never transition from being transactional to long-term money is bad financial management. And that's one of the things where I see, I was on a jet and I asked a private equity guy, I go, what is it about all these businesses you're buying back? What's going on? He goes, Ray, across the board, they don't know how to read financials and they don't know how to manage financials. So by the time they get a financial statement, they don't know what they're looking at or what it actually means and the story it's telling, and they don't know how to manage it. So the company inevitably blows up on their face.
Dude, so
it's crazy.
Man, this stuff fascinates me right here, right? Because a lot of people play business at the surface level, and the surface level is, I'm starting this business, here's what I do, and I do that for a long, long time. I flip houses, I wholesale houses, software company, right? I have a software company, we're going to build that. So that's all amazing stuff. But like you said, what happens then with the cash you build up? What happens with seasons? How do you protect that? And so I want to kind of break it down really fast for people. So it sounds like the journey that you went on, you flipped houses at the start,
Yep.
and then you bought some rentals, and then you sold them at the top or near the top. You had cash. You took a couple of years off, right, around that first one. And then the market started to tick back up. It sounds like at that point you had cash, and then the prices were really low, so you were buying and holding at that point, right?
Right.
And then
we were still doing some transactional stuff too to to cover up.
Yeah, so you were buying and holding at that point, deploying the money back in where you could get a good return. And then you started doing transactional stuff again. And then you saw the market cycle to where it was like, we're going, okay, we've built up all this equity. That I love the way you said it, that we have earned this equity. And now let's not go, okay, well, maybe it's going to be better in 20 years. I'm going to hold on for 20 more years. You're going, it's this way now, and I can guarantee it's this way now. Let's cash it out, get the money, which builds our bankroll up even more. And now you guys are deploying it in a different way, right? So you're kind of in this shoulder season where you've deployed you've sold those assets, you have the cash, but now you need to then go deploy the cash somewhere. And real estate's too expensive at this moment to deploy it there, so you're deploying it, working with investors. Is that what you're doing, loaning it to investors?
Yeah. So we'll do private lending or transactional funding, or we'll do JV deals with guys with the right guys in different markets. And what I like about what we're doing now, it takes us out of the operations. We were okay operators, but my unique ability as an operator, my unique ability as a leader, being able to inspire, being able to impact high level, and partner with the right operator to help them in that relationship grow. And I look to find operators that are better than I am. And I used to diminish the value of the operator. I don't. I cherish the operator. I need the operator. The biggest mistake I've seen operators do is try and go be entrepreneurs. Dude, stay as the operator because you're making money here and you're crushing it and you have a unique ability. And dude, guys like me need operators.
Yep.
You know what I mean? So like, stay in your lane, figure out what you're great at, figure out what your unique ability is, and then dominate that lane. And Trevor, for us, honestly, just on a strict cash flow, just strict, not appreciation, not depreciation, not tax benefits, just strict monthly, consistent, headache-free, as low as possible. With as low time management as possible, because my time has become more and more valuable.
Yep.
The loans have been epic. When I get into a JV piece and I want to push the operator, it gets weird. But if I just charge a flat interest rate and they're paying me 10, 12, 15%, and I'm hands off at once the initial work is done, and we can do that a few times, dude, life is pretty easy.
Dude,
I mean, this is why the banks do what they do, and they have the biggest buildings. And it's I love the assets and everything else, but guys, understand that is an operational business. Yeah, you can have property managers and everything else. And I've always noticed that with that cash flow business, apartment buildings, we still have some apartment buildings. It's been consistently inconsistent. The cash flow is consistently inconsistent. Some months are great, some months are not. But with the notes, I shift the risk to the operator, and I can diversify across markets, across property types. It's pretty solid from a risk-adjusted rate of return.
Dude, so I want to do a little bit of math for people, just because like this is awesome. One of our most popular episodes that we've done on the Carrot Cast is one with my friend Jack Bosch, and I didn't bring him on to talk about land stuff, and that's what he mainly does is land deals, right? I'm like, let's talk about your book, because I love the book. I give it to a lot of people that I know could use a lot of financial help. And his book is amazing. He has this thing he calls a wealth wheel, and the wealth wheel is basically what you're doing there. And so he really talks, of course, about cash flowing assets. And I think where most people go is towards the real estate side of things. Jack's built up a good portfolio. Now he's going into multifamily. He's got some land, stuff like that. He also does some private lending. But like you said, it's like, what is it that fits what you want? So I want to do this right here. So this could bomb or this could be awesome. And hopefully this will connect with people so they can really zero in on what they want to do to build their wealth. So let's just assume you're doing some sort of active income and whatever to make business or to make income, right? You're flipping houses, you do have a business, software company, whatever it is, right? So you've got that. And then I think a lot of people, their goal is like with their passive cash flow. I don't know why, but this number is pretty popular, like $20K a month. If I can get to $20K a month, passive cash flow, then everyone thinks that they've got it made, right? So we're just going to use that number. So in your market, and just use ballpark numbers, not going to hold you to these. In your market, how many houses would you have to own, or apartment buildings or whatever, to get yourself to $20K a month passive cash flow after the expenses and stuff?
So that's a lot of apartments, because what happens is a lot of guys say, hey, I own a 200-unit building. Yeah, but chances are you don't have the balance sheet, you don't have the liquidity, you don't have the net worth. You're going to have to find a sponsor. They're going to take 25%. You're going to have to then do a syndication. You're going to have to give, you're not give up. You're going to have to share the beans, because that's where you're at. So you might actually keep 50, $100 a door,
yep.
net. You need a ton of doors. I mean, I don't think people actually do the math. Whereas they don't. You know, I could get you 20 grand a month off of maybe a couple $1 million, $2 million at 12%, which I can put on the street pretty easily and on a low risk. You know, that's 240 a year. Well, that's the number exactly. I just shot that off my head. It's 20 grand a month is $2 million at 12%, no point.
Yep. Exactly. And I'm glad you jumped there, because that's what I was wanting to work out is there's a lot of different ways to get to that goal. Like one way is like Ramon's doing here is you can do the active income, put it into real estate when the market's down, actually follow these cycles, exit those deals when the market's up, take the money and put it in cash now. So now you're not banking on, oh shoot, I've got to build up more houses. No, he went through 2 cycles, and I'm just going to use that example again, and now has a couple $1 million in the bank account, right?
And Trevor, I've got no debt now.
And full liquidity.
When I had the houses, right? When I had the houses, you know, guys, debt's a two-edged sword. Everyone talks about debt when things go right, but I've been there with debt when it doesn't go right.
Yep.
And it's you know, like right now, people say, oh, you know, why don't you start off the loans and take a little piece and everything else? What for? 12% sounds pretty nice, and I still get to go hang out with my daughter. Like, what is more what? I want more life. Yep. I don't want more drama or more headaches.
Dude, this is awesome. So hopefully this is kind of lighting off a light bulb in your guys' brain on multiple ways you can actually achieve what you're looking to do. Because when you lurk in the bigger pockets forums, you go over here, most of the time what people are talking about is just doing more of the transactional stuff or building up a big portfolio. Both great things, but they're great things in a silo. Like, you got to have a strategy and how those work together towards your greater goals, so you're not just doing those forever. So you're not having to manage, you know, 150 units or whatever. I was down at a mastermind in Dallas, Texas a couple weeks ago. Great mastermind, amazingly successful people. And there were a bunch of people in that room who, you know, this guy had 250 houses, and this guy had 87 houses, and this person had 100, you know, whatever it was. And they have figured out their systems and processes, so that is what works for them. But I'm just looking at it going, man, I would much rather find a way to make that same amount of money, and then like you're doing, I'm doing the same thing on lending money to investors. I'd much rather do that and deploy the money so I have full liquidity on my cash that's still in the bank. So I'm not lending it all out. You know, I'm not going to lend it all out, but I still have the liquidity on that. It's with people I know, like, and trust. The checks that I get, dude, are like clockwork from the guys. I mean, it's like direct deposited every single month in my bank account, every single month. And every 3 to 6 months, you have the option of going to liquidity or keeping it at play, which is great. You don't have, guys, once you commit to a real estate deal, that's a 2, 3, 4, 5, 10-year commitment. Especially if you're buying now at the top of the cycle, expect a 10-year commitment. I'm not saying don't look at the opportunity, but understand that you could be in that deal 10 years, and is it worth it? And the headache and the drama and everything else, like, do you want all of it that comes with it? Because through that cycle, you are going to have that down cycle. So do you want to go through that winter period with that property? You know, Trevor, when I think about it, brother, I think a lot of the folks that are, you know, a lot of the guys I know, they're tied to the way it has to look. Oh, it has to be in a apartment building. Dude, what if it was a loan? Like, as long as it frees up my time and I can make cash flow on it, and I have the right partners with the right core values, I'm pretty much open to any opportunity as long as I have a great operator and they can run it. I trust them. I have controls in place. If I can control and collateralize and get out of the way, oh my God, I'm interested. So I want to wrap.
Think about it.
Dude, I love it. So I want to wrap this part of the chat here in a second, but I want to ask you this quick question. So currently, you divested yourself from those properties. You've got the cash. You're lending it out. What do you feel is kind of next for you in the market cycle stuff, and where do you see yourself then shifting your money in that cycle, whatever the next thing is?
Right now, I like the mobile home park space. So I'm talking to a couple of great operators. So one of the things that I've gotten as I've evolved, Trevor, and I think you have too in business, is I will never go out and look to kind of do something or be something I'm not. If I know a couple of guys have done a couple 200, 300, 400 deals, I'm going to always JV with that person and take a lot lower return and put up the money, because I'm all about risk mitigation. I want max upside for the minimal downside. And if I can make a 12 to 15% yield and not take on risk, or my risk adjusted rate of return is lower, I will do that deal all day long. I just work too hard to lose money, and I don't like losing. So I like to play it safe, but still make an aggressive return. But I'm looking at, again, I can't stress enough, guys, the value of looking for risk-adjusted rate of return. You can still generate 15 to 20% return without taking a lot of risk. But you have to know, to be a good financial steward of capital, you have to understand how to manage risk. And I don't know how you manage risk without understanding market cycles. Like, it's just, you're going to get hit by a brick and you're not paying attention. And then when you play with other people's money, which is other people's stored, you'll love this, Trevor, stored labor after tax. That's what money is, stored labor after tax. When you start to raise capital and be a financial steward of their capital, how dare you not know that? You haven't earned the right to take someone's capital if you can't manage your own money. You haven't earned that right. So, so guys, I caution you guys, when you take on someone's $300,000 or $400,000 and you take someone's life savings or stored labor, someone squirreled away all these nuts during all their winters of their lifetime. I don't take that as I don't play with that at all. I mean, I treat it as the most important thing, and that's why we have an abundance of it, because they know we know how to manage it. I'm actually turning down money just because I'm not able to place it, or I haven't set it aside. So look, when I'm ready, I'll call you.
Yeah.
And a lot of guys are just sitting on money waiting for me to place it because they know that if I place it, I vetted the operator, I'm going to put up money with their same money, or I've already put up my own money with that operator. So they're never taking on, they're never kissing on a new frog. I'm always taking that kiss first with my money. So they know, like, dude, this guy's betting with me. So all they're doing is riding on my bet. So I'm in the ship with them. So, which is one of the unique things we can do because we have liquidity. You end up actually attracting more. It's crazy. Weird how that works. But so what the market looks like for us now is we'll do some actual physical real estate plays. I do want to do some of that. I think it's intelligent for us. But I am looking hard at the mobile home park space. I'm looking hard at the self-storage. I think the apartment space still has some opportunity, but it's being yielded out. So unless you can find a great operator or a unique opportunity, I really like the self-storage mobile home park. I like the strip mall with a service strip mall. I'm looking for places where people aren't looking for yield, and there's still a service industry, not a strip mall where it's like a sports authority. I'm looking for someone where it's like a barber shop, a laundromat, like a C, B area. I'll only do B areas. I'll look at a C- or C+ area for the retail. And I'm looking for the number one thing I look for is an amazing operator, because that's a unique ability I don't have. So I need an amazing operator, an amazing, trustworthy, core alignment, core value fit operator in that specific niche. And I will take a lot less return to partner with them, because they're going to protect my capital with a proven track record. And I'll vet them. I'll run a background search. I'll get into a relationship with them. If I have to pay them, I will. I'm not afraid to pay someone to get into a relationship.
Dude, so we were talking right before this. Is like a really, really good segue. We were talking about masterminds, and we were talking about how do you build a relationship and really thinking long term. And I know that's something that I can attribute a lot of my success to. I did a podcast episode, I can't remember, probably 30, 40 episodes ago, called Planting Seeds. And that's something that I've been really good at, planting seeds in my life, where I'll find someone who's a really quality person. I'm like, I don't know where this is going to go, or if it ever goes anywhere other than us just knowing each other and being friends. But I'll intentionally
I love
plant
that
seeds.
one. I listened to that one, and I got a lot of value. I go, how can we work together in the future? I don't know if it ever opens up, but I'd love to. And I've been so intentional with that piece.
Dude, and I like, here's a specific example, but then I want to toss it back your way on some things you're doing to find those people and attract them in your life. So literally today is the last day of work for a good friend of mine named Daniel. And Daniel is the VP of marketing at a pretty big company. They're like multi-$100-million-a-year company. He started from the ground up. He's my age. He's 35. He started from the ground up 12 years ago. It's a big company here in Oregon called Dutch Bros. Amazing culture, amazing company. The largest
coffee company, right?
Yeah, it's the largest drive-through coffee company in America. So he worked his way up from what they call broistas, a barista. We had actually Travis Boersma, the CEO and founder of that company, and Lee Cockrell, who was the head of all Disney World operations for about 20 years. We had them on a joint podcast on the Carrot Cast around episode 20 or so. So if you guys want to listen to these two people, the head of Disney World and then this guy who's got the largest drive-through coffee company in America, multi-$100-million-a-year company, we talk about culture. It's really cool. Anyway, so Daniel, amazing videographer, such a great talent in telling story. Any of our fancy videos we do at Carrot, it's always Daniel doing them. And I'm sitting there going, like, you're the VP of marketing for this company now, dude. He manages 85 people and all this stuff. And he keeps on doing these videos for us on the side. I'm like, why are you doing this stuff? He's like, man, I love doing this stuff. It's like, this is what fires me up. Managing all these people isn't. And what I did to plant the seed right there, and I do this all the time, like, man, I don't know, it's probably never going to happen, but I would hire you in a heartbeat, first of all. Like, I would love to be able to work with you more. And if you can ever find some way that we can work together more, dude, let me know. Like, give me the first opportunity and let's chat about it. And he called me up about a month ago. He's like, hey, I just want to talk with you about a potential life and career change. We talked just friend to friend, not business opportunity. And it came down to that his passion is here. He loves the business at Dutch Rose. It's an amazing company, but he kind of figured out that what he's passionate about, he doesn't have an outlet there anymore. Long story short, his last day is there. He's moving into the loft on Monday.
Awesome,
our offices. And
congratulations.
He's just a guy that I never thought we could actually have here in our offices every day because of his skill set. And he's world class in the content and videography side of things. You plant a seed and show care for someone, it comes around and he's like, man, that's my new home. And he's moving in here Monday. So
I'm proud of you, brother, and I'm proud of you for being who you are to attract that. It reminds me of Steve Jobs. I think Steve Jobs sold a guy at Pepsi. You know, he chased this guy for years, right? I mean, chased him for years and said, hey, one day he got this. He goes, hey, you let me know when you want to stop selling sugar shit to kids or sugar water to kids and come out and change the world.
Yep.
And then that's when it created that legacy piece, because we all have a purpose to serve a bigger purpose, and we know if we're living that or not. And I think it goes back to kind of your point. How do you attract someone like that? First, you have to live it, I think. And then second, I think you have to get really clear on what your unique ability is. And you're always talking about this, Trevor. What are your core values? Because then you'll start to attract core values. I've never done a great deal with a shit person. And I'm not judging that person. I'm just saying their core values don't match mine.
Yep.
And if we're off on core values, we're not going to make that work. Like, that's a hurdle we're not going to go overcome. So if we have that core value alignment, and then I know what their unique ability is, and I can play they can play their lane and I play mine, that's a marriage. I mean, that's someone that you do whatever you need to bring them on board. And you start small. I love the way you started. You start in a relationship. You start transactionals where you start, and with the intention to build a relationship, with the intention of what is the core value, play the long game, create unique. I see this. You do this in your company when you work out with guys. We do the same thing here. Create these unique experiences. Like, how do you go from a network to then creating an actual relationship and then going deep with that person? So, again, it's just how you're built. And I love what you're saying, Trevor. When you add value and you really care, people can sense that, and they sense that you really care, that you don't have an ulterior motive, that you're really looking out for their best interest, even if it's not with you. I mean, guys, on the house buying piece, we would do that on the regular. I'd say, listen, we're not going to be, you're not, I can help you, but you really don't have a real need here. Let me send you somewhere else where I can best serve you. And a lot of times I'd say, look, I'm the best person here for you. Here's what they're going to tell you, and I got a better price because of that. But like nowadays, I think that really being genuine and being from the heart, all these sales strategies and closing strategies, dude, I heart close people.
Yep.
I be sincere. I come from the heart. They know that's no BS. They know when I say something, I mean something, and people can sense that. They may not have a college degree, a lot of these sellers you're working with, but they have street smarts, and they can sense if you're being legit with them or not, if you're being real, and if you're going to do what you say you're going to do. They have a high BS meter.
Yep.
I mean, Trevor, you know that. I mean, you can spot that I'm being real with you and I have no real agenda. I'd love to help people. A lot of things I do is masterminds. I do a quarterly mastermind down here in Miami. I limit the room to 15 people, but I also am part of the mastermind too, meaning I have my own mastermind that I go to as well. And Trevor and I have a lot of friends in that mastermind. And the reason I believe in masterminding so much is that you get around a group of guys and girls that are all going through the same challenges, and everyone has a different unique abilities and different operators, and then we're figuring out together, and it's real time. Yeah. And then you have a peer group that's playing the game of life to the standard that they want to be playing to, right? To the next level. It's not comparing this thing and competing. That's a form of scarcity. It's about you living the best you that you were supposed to be, and you really embracing that. And when they call me out, like one of my buddies, Joe, called me out, he goes, Ray, push that mastermind up and start living your true self. Like, start doing this. And I was scared. I mean, I threw up. I mean, it was like I was just that uncomfortable. Yeah. But then he came down to my event and supported me. And he goes, Ray, you got 22 people in this room, and they got epic value. And it was the right room, the right people in the room. So once you get everyone in the room shared the same core values, so we were able to pitch and catch and help. And in my room, I have guys within the real estate space, but different spaces: apartment buildings, mobile home parks, self-storage, loans, IRA guys, asset protection attorneys. Like, for me, it's more about how do we build wealth in the space. Yeah, there's some transactional conversations. Everyone's already doing deals. I don't want to help the new guy get it, because that's not me. I help the guys that get it better. How do they make more? How do they keep more what they make, and then ultimately do less, have money work for them, money multiply? How do they then just kind of make money on that money, right?
Yep.
So how do they multiply? So make it, keep it, multiply. That's what I help guys do, and help them become wealthy through real estate, through their unique ability, through their unique way. Everyone's way towards the mountaintop has to be their way. Otherwise, you're setting up, like, Trevor's way isn't my way.
Yep. Dude, so...
and I think we're all playing on... Excuse me, I didn't mean to cut you off.
You're good, man.
But I just see that on the Facebook, and it's not like everyone's copying everybody else. It's like a real estate incest thing. This guy spent 20,000 more. This guy's numbers. Guys, the only numbers that matter, the only goals that matter, the only things that matter are your stuff.
Dude,
like,
so,
what did you come up with?
Man, so you talk about unique abilities. We've talked about that a good bit here. I can vividly remember, I mean, it wasn't that long ago, right? It wasn't that long ago, but I can vividly remember when I had heard that concept the first time, and I thought that I knew what they were, but looking back now, I had no clue what they were at that time. How did you come across really being convicted that you know your unique abilities so you could really live in those better? And was there a time that you just absolutely were not living within them at all? Sure.
Yeah, a lot of time when I was being the operator in the business, when I was actually operating Summit Home Buyers and running that company as a CEO and the integrator, that was not me living that vision.
Yep.
And so what I did is how I got real intentional with that. I bought everyone that came to the mastermind the book. That book, Unique Ability, it's by Dan Sullivan from Strategic Coach. And I did the work, guys. I went through the Colby test. I sent emails out to all my peer groups and said, guys, what is it, these things you know about me? And then I went through the work. I did the Strength Finder, and then I journaled it out, and I made my top 10 things. And who am I going to believe? What's my vision? And then what are my top 10 unique abilities? And then I got clear on what those are for me. And I read those probably once a month. Initially it was once a week. Now I read about once a month. I got to get back to it just because I'm falling. You'll always, the universe will always want to push you off of it a little bit. So you got to get right back on, because that's where you thrive.
Yep.
Anywhere off that, you're not going to win. You know, so you guys there's no shortcut about it. Your team and peer group can help you. And a lot of times that's why I like masterminds, because like today, Mark said, Ray, you're off. You want to go do deals. Don't go do that. Keep the loans and keep the masterminds, because that's where it's easy for you. You're making impact, and people go where you're celebrated, not tolerated. I love that.
That is good. I like that.
But the only way you do that, where it's easy, lucrative, we spoke about that in the last mastermind, easy, lucrative, and fun. That's what you want to do, business that are easy, lucrative, and fun. How is it easy? It's easy when you're playing your unique ability, when you're doing what you normally do, like financial stewardship, managing money. Like, those pieces are easy. Being able to limit the taxes, understand.
Those are things. Can you hear me?
Yep, I got you. You're
all right, cool. My earbuds died. Yeah. So like, how do you transition from whatever it is you're doing now? And if it's not a unique ability, you know it. It's kind of like what Gary Vaynerchuk is always talking about. He goes, Ray, not Ray, but he was like in general saying, I'm 99% happy.
Yep.
Well, he wasn't playing in his unique ability. The reason he's so crushing it now is all he does, as much as, if you look at Gary Vee, all he does is content creation, content sharing, impact. You don't see him do the accounting. If it's outside his unique ability, he's not doing it.
Dude, so such a funny side story. So the first time I met Gary Vee, I've met him a couple times over the years. And the first time I met him was his very first ever paid speaking gig. His very first ever. This is in 2010 in Orlando. And Gary was still the wine guy at that time, right? He was still the wine guy. And even at that time, he was talking about, find what it is that you're passionate about. He was really big on passion at that time. He wasn't really bringing up the unique ability thing, but I think passion was that next step for him. That when you feel good about this and you're charged up about it, it gives you energy. Passion is one way to interpret that that's the direction you should go. And he was the wine dude at that time. He hadn't even put out his first book yet. And it's just so cool seeing that journey of him consistently honing in on what is it that, like you said, are my unique abilities. And I'm going to double down on my strengths, basically, is what he said. That's such a big deal.
What's unique about the word you said, passion, is in the book Unique Ability, there has something that you're excellent at, and then there's a unique ability.
Yep.
The key difference between something you're good at or great at and it being a unique ability is, do you have a passion for it? Because there's some things I'm great at, but I don't have that passion for it.
They drag your energy down, man.
Right.
Yep. And that was the key for me. That was the key for me, because I had bought the book, and I suggest to everyone, if you're struggling in your work, and you may not even look at it this way and go, man, what are my unique abilities? These are probably the symptoms. These are symptoms that I had. The symptoms were you might be finding yourself hitting a ceiling, and you're like, I can't crack through this for some reason. Like, what is it? I'm doing everything. It seems like, I'm doing the right things. That's one thing. Another thing is you may be making money, right? I was making money then, but the problem was I was like, geez, I'm really good at these things. People tell me I'm really good at these things, but I'm finishing the day just like uninspired and out of energy, and I didn't want to get up in the morning to do the work that I had set out to do, even though everyone's telling me I'm really good at these things and they're paying me for it, And that's some of the worst advice that I've heard. Is it's well intentioned, but where people say it's that is your unique abilities or whatever is the stuff that people say you are like amazing at, and that's what I thought, dude. That's what trapped me, man. It's like everyone was telling me I was amazing at it. The problem was I wasn't doing the things that actually lit me up. Like these podcasts right here, I love doing this stuff. It's a unique ability of mine. It gives me energy. I love doing it. I wasn't doing any of that stuff because I didn't have time to do it. I didn't know how it could make me money or strategy. I love strategy. I hate implementation. Like implementation drags me down.
Execution is crazy.
Oh man.
And I see the value in it. I'm just not the one to do it. I need to find someone to partner JV with, whatever, so they execute.
And that was my problem, because I'm looking at it going, well, shoot, how can I earn an income? Because all my income's coming from me implementing. So how can I earn income by only doing strategy, not doing implementation? And I'm like, how does that even work? And how am I going to then make money just talking to people all day, throwing strategy at the wall, networking, and not doing any of the stuff that's making me money right now? And it was hard, man.
Network, mindset, strategy, coaching. Yep. I can do that. I can do those for days.
Yep, I'm the same way.
And it's like a natural ability. Like people say, oh, it seems so obvious to you. That's when you know. Like if someone's looking at you like, dude, that was so easy for you. That's when you know your unique ability and you're enjoying it. And a lot of times you're not aware that that's a unique ability for you, so you don't know how to live into that. And then you never strengthen that because, you're good at it naturally. Like Jordan had a great shot. He had a great athlete. But once he kind of triple down on those few things from your last podcast, those 2 or 3 things that you're great at. Mm-hmm. The thing is, you're only good at one. You're only great at 1 or 2 things, and everything else you think you're good at. Yep. And it's really a distraction. And a lot of times we get caught up. Whenever I get caught up and I get into a deal or I get into the weeds somewhere, it's bad. Mm-hmm. I'm not enjoying it. I'm not really making money. And the worst part is I do make money. Yep. Right? I make money from doing deals and real estate and flipping deals, and I made a lot of money. But it didn't fulfill me. Yep. Like me being able to help someone become a millionaire and then help them impact their generational wealth for their family, that's what drives me. Me helping other people become financially free, me helping them get it at a higher level, me having 10, 15 amazing leaders and helping them become better leaders so they can create impact for themselves and their family and their organization and help their people become financially free so that their legacy passes down. So that now we're playing for legacy, impact, generational wealth. That juices me. All the other stuff, you know what I mean?
Dude, so I want to ask you some questions here because you and I, a lot of our stuff is insanely similar. I think that's why we resonate with each other. Yep. Let me ask you some questions. So why do you get fired up about that butterfly effect of being able to this podcast right here? People are going to listen to it, right? And we hope that someone takes it, latches onto it, it changes their life, and then that's like you said, it changes the family tree. Why is it that in this part in your life is your mission? Like, what is it within that excites you?
What is it within that excites me?
Like, is there, and I'll use an example, right? Like, some people, their mission comes out of their background. They had an upbringing that they didn't have something, or they had a lack, and therefore 20, 30 years later, they find their mission helping other people not have that lack, as an example. Or for me, and I don't want this to taint you, I mean, it might be the exact same, because a lot of our thought process is very similar. For me, the reason that I'm so passionate about amplifying leaders and helping entrepreneurs actually create businesses that give you that freedom and flexibility that you truly dreamed of as an entrepreneur, most people don't have, in the finances and the impact. The reason that I'm pumped up about that is because I know that there's the world that we're in right now, the world that is fastly becoming, is a massively negative world. I know that when you're in a negative space, you're not happy, you're depressed. People just in general, it's just not a good place to be. And I'm like, can we help use business in little tiny drops here and there to make the world better? I know that sounds weird, but like, how can a business interaction with Carrot make someone smile? And they had a shitty day that day, but they come and have an interaction with us, and it makes them smile. And like, man, like maybe I should be doing business better to make other people smile and make their day better. Like that for me is why I do what I do. It's to be that beacon of positivity and possibility. And there's a lot of side shots from that, right? Where it's like, if they do this, it also, you know, then they'll inspire their network and their people to do the same thing. And then there's people over here that are no longer going to be doing things that they're not passionate about, that are just dragging them down. And they don't think there's any possibility in the world. Now they believe there is possibility in the world because they saw their brother do it and we helped their brother do it, that kind of thing. That's why I do it. But is there any kind of thread there that, what is the why? So
the why for me is, you know, what my mom and dad separated when I was maybe 9, 10. And I used to work early on with my grandfather and my dad over at a flea market, kind of like, you know, just selling like different like tools, like handyman tools and stuff like that. I was making like $20 a day back then. I was like 9, 10, getting up at 4 or 5 in the morning to go there and set up and kind of help out. And I was good with it. And then my mom and my dad broke up, and she went through some financial struggles. And I probably had saved up maybe $400 to $500 at that time. And I was there for her, and I was able to kind of give that money to her so that she had to pay for groceries and whatnot. And I part of it is kind of why I still like not like I don't loan out all the money. I kind of keep a lot of it where I still keep a lot of liquidity. A lot of guys like, why do you keep a lot of liquidity? And that's still it's still there, right?
Oh, yeah.
And I'm working through it because too much liquidity is bad. It's not just it's not smart financially, but it wired me emotionally to say that that'll never happen to me or my family or anyone that happens. And they broke up because of it. So they had money issues, right? My dad was very controlling with the money, and then she didn't have any. She didn't know how to manage it. So like single moms, well, you know, with jobs, working single moms, like that whole piece of just being a provider and being a great financial steward of capital. So finances, for that reason, that emotional piece has always driven me. And I just didn't. I see people struggle financially, and you know, Trevor, you and I are an exception, and most of your clients are an exception. But the reality is, most people, if they lose their job in 2 weeks, are getting evicted. Yeah. I mean, that's just the reality of the United States, guys. I mean, most of us have that different financial life, but you know, I didn't have my first child until I had $1 million liquid. I mean, that was one of my first rules. I would not have a child, right? And it was just so not pain, but I just didn't want to. I wanted to be able to serve at the highest level, and money isn't everything, but it is everything when you don't have it.
Yep.
And then being able to give my daughter lifestyle and experiences and network that I didn't have. So that's what really drives me. And then kind of what that manifested into over time, Trevor, is being able to bring employees, team members, really I call them family, really is what they were. And I still keep in touch with a lot of them. Bring family on and then show them mindset, show them strategy. Like, guys, one of the best feelings I've ever had outside of my wife and daughter is I took an employee making $30,000 a year and turned her into a multimillionaire. Now, she did the work, right? She did the work. Like, she did the push-ups. I took her to the gym. I helped her with 20 Robins. I helped her buy the books. I helped her, and she was a single mom, bad divorce, you know. But she did it. And outside of my wife and daughter, that's my biggest legacy piece. Forget the money I made. Like, this person's daughter's life, like, generations will change. Right, so that's the game I'm playing for at this point in my life. I'm not playing for the money. The money is a measure of how much value I'm adding, also a measure to make sure that anyone that comes into our mastermind, into our family, is committed, because I believe that when they pay attention. So there has to be that value exchange just to respect the relationship. But really, I'm not playing for the money anymore. I'm playing for the legacy. I'm playing for the impact. And I'm playing to have them want to make that change and be an enabler of that, even though I get that they have to do the work and they have to want it.
Man, so I want people to take mental note of a couple things in there, right? So, first of all, one thing that you said that really is going to resonate with a lot of people, and I don't want to have this get lost, because we've talked a lot about impact and purpose and unique ability and these kinds of things. And I know when I was hearing those things 7-8 years ago, and I didn't have those the way that I wanted to, it felt like this unreachable thing. You know, it's like I see what it looks like to have that, but I don't see the path on how to get there, kind of thing. You know, until what happened to me was, you've mentioned a few things there. You're in a mastermind and you host one. Okay, so look at my own journey. Literally, I joined a mastermind during that phase of my life, and I started to host one. I didn't charge for it just because I didn't have the mental, like for me, I wasn't mentally there to think that I could charge for one, was my problem, right? And this is like in 2010, something like that. I joined the mastermind. That's when I found my unique ability, because that dude was like a big Dan Sullivan guy. Gave me the book, went through it. I actually ended up joining Dan Sullivan's thing. So there's right there, there's another thing. There's a coach, right? So I think a lot of people see what you want, but then you're like, what are those steps? And I think way too often we think that we've got to be the ones that power through it. But we've talked probably 20 minutes during this podcast. You could probably stack up the combos in this podcast we've had, this episode, that have talked about relationship. And those of you that are listening to this, go out there and quit thinking about the lack that you've got and start going out there and go, how can I provide value to these people that are amazing and I want to get to know better? Is there a mastermind I can pay money to join if I have to surround myself with those people and up-level my thinking? Is there...
And then within that too, like spaced immersion over the mastermind.
Yep.
Like you need not just one time. And then what I'm real keen on too, Trevor, and I know you are, is creating unique experiences. So like we'll go on a yacht. We don't do that every time, but like we create, and then it's not about the yacht. It's about getting guys into an environment where they can be open and vulnerable and create these memories. Guys, you won't take all the money with you. All you're going to take these experiences and these magic moments. Now you can create them intentionally. You can hopefully show up every once in a blue moon. I'm intentional about these experiences, because that's all I'm going to take with my daughter. We spoke about that. I took my daughter on a little, like, it's like a city train downtown Miami. We went, it's like a monorail and it's free, and it's pretty ghetto, it's urban, right? She's loving it, screaming choo-choo train, and I'm in there having ice cream and it's free, and we're going around the whole city. Guys, no phones, my phone is off, and I'm there hugging on her, loving her, telling her how I love her, and she's hitting me, Dad, that's it, you know what I mean? But this is kind of what guys, these moments is what we're playing for. And if the money's getting in the way and you're anxious or you're concerned about, and you're not present and you're missing that, and you don't have guys in your life, that other guys and girls that are saying, hey, you're better than that, and that they believe in you at a higher level than you believe in yourself. I mean, Trevor, the reason you didn't charge for that mastermind, and I did that too, is because you didn't believe that you could bring that much value.
Yep.
It's not about the money, it's about the value. The money's just there as a measure.
100%.
Yeah, it's crazy. We get in our own ways, guys, and then you're not sharing your gift with the world. That's really what like kills me from the heart, guys. Is that you were here to be and contribute and give so much more, and when you don't do that, like part of you starts to die. Like you're almost like slapping the creator in the face when you do that.
So everyone needs, if you're listening to this on iTunes, please do me a favor and do yourself a favor. Go to us on YouTube and find us on YouTube, or just go to carrotcast.com. You'll be able to find this episode. What I want you to do is go find this episode you're listening to right now, watch the YouTube version of it, because as you're saying those things, dude, like I started smiling because you can tell your passion behind it. You're just like physically, everything in your body just changes when you talk about that stuff. And I'm like, dude, I love seeing that. And the things that you were passionate about, whenever you've been doing that in this podcast, it's always about the other people. Like whenever you were talking about what you were doing yourself, you weren't stepping up and going, like every time you were getting louder and stepping up when it was about what you're going to be doing for other people. And I love that, man. That's one of the reasons I want to get you on this episode of the Carrot Cast. And I know we could talk for hours about real estate and deals and this and that, but a few major takeaways I want you guys to have. Market cycles. Okay, market cycles are one of the ways that Ramon has really crushed it as a real estate investor. I'm going to say real estate entrepreneur, because he's in real estate and sometimes he's investing, sometimes he's loaning, sometimes he's buying, whatever it is. He's a real estate entrepreneur that finds the opportunity based on the cycle. Learn that. That's going to be a massive thing for you. Next, unique ability. Go find that book. I think it's $20 or $30 on strategiccoach.com, the Unique Ability book by Dan Sullivan. And surround yourself with people. Start building relationships. Start building value. So, Ramon, I'm going to give you the last word, man. If you have any words of advice for people, just as they're building their business, as they're whatever it is in life, business, whatever you want to do, what do you want to toss out to people in this podcast?
I think the biggest thing is just surround yourself with a peer group of people playing in the game at the level of life that you want to be playing at, and it's not a compete. It's not a compete thing. It's a they're living the best version of themselves as much as possible, and they need you to help them live their best version as well as you need them to help you live. So to me, a great friend, a great peer, someone who calls me and says, hey, you know what, Ray, dude, you're better than that. Like, you should have been doing this mastermind 5 years ago. I need you to push that date up and push it now and call me out in front of 30 people. So I had no response but to say, all right, I'll push it forward. To me, me and this person, Joe, we're super tight now. Like, people think, oh, you just took that. I took that and I he helped me make my dream happen faster and serve other people at a higher level. So through him, I was able to serve and impact 20 people in their generations. Guys, you need that peer group. I think all the studies have shown the last, your income is going to be within 20-25% of the 5 people you hang around with. Guys, and then not just that, your income is a measure. To me, income is a measure of impact, influence, right? It's all the same thing. Income, impact, it's all the same. So make sure you're surrounding yourself with the guys and girls that are constantly pushing that level up, and you're in relationship with them where you get on the phone with them, you can call them, and you're constantly doing that. It's really the one thing I'll leave you with, and just get uncomfortable. Make sure that be open, vulnerable, raw, authentic, and get uncomfortable. It's the only way you're going to grow. If you're out there alone, that there was a study, like if you and I sat on the bottom of a hill and I looked at it alone, I make it 20% bigger. But if I'm there with Trevor, that thing comes down 30% smaller because we're doing it together. Gotcha, dude. That's really, really good. Man, I appreciate the time today. Like I said, I could talk about this stuff for hours. We could talk forever. And any of you guys are interested in coming to the mastermind, we'll have a conversation. The next one is May 18th and 19th down here in Miami. Adrian's coming. So where can people find out about it? MiamiMillionaireMastermind.com. I'll send you a link. So it's MiamiMillionaireMastermind.com. If you're not following me on Facebook, please follow me on Facebook. I provide weekly Facebook Lives. I just add value. And then, get on my email list. Once a week I post. I do one email a week, but high quality content, things that I'm taking away from a 10X seminar or from my last mastermind, just key things that are implementable that I'm learning as I'm growing. And what's happening now, Trevor, has happened with you is now that I'm leading a mastermind, I'm not just learning for me. I'm learning for everyone in the group. So I'm learning at a whole, I'm bringing back 3 and 4 manuals of notes because I'm learning at such a high level. It's not about me anymore. It's about we and how do we do it together. So I'm just learning at a higher level. I love it. Well, man, appreciate you coming on the Carrot Cast. Love you. Have an amazing rest of the week. And everyone go to his URL and go after it and build your business the right way. There's a lot of nuggets in here. Take notes. And what we want you to do is not be a librarian as far as learning goes. Librarians catalog information, don't do anything with it. So go out there and please take at least one thing from this episode. Do yourself a favor and also do Ramon a favor, please, and go, I respect you and I respect myself enough to take some of this wisdom and put it to play in my life. And you guys' life will be better for that. If you can go to iTunes or wherever you listen to this episode of the Carrot Cast and give us a rating on this episode, let us know what you took out of this episode that you're going to execute and how you're going to go out there and have it change your life. All right. Love you guys. Have an amazing rest of the week. We'll talk soon.